Welcome to the Holistic Accountant Podcast. The aim of this podcast is to demonstrate how accountants must employ a holistic approach to help their clients maximise wealth. It's not just about preparing tax returns. So each week, Mena Abraham and I will discuss topics to help you better understand some of the things your holistic accountant can help you with.
So we often get asked by clients, how do you value a business? So Stuart, how do you value a business?
Well, really, the value of a business, Mena, is the present value of its future cash flows, which is a lot of words that probably don't mean a lot to a lot of people. Essentially, the value of a business is how much income it will give me over time, and then what is the value of that income today. So there's two components to that. The first one is how profitable is the business? So that's really what its profit is today and what it could be in the future if it's got growth prospects. So part of it's going to be around growth is the actual business itself, whether it's got a product or a service, and how competitive and compelling is that product and service. And then the second element to that is the industry. So is the industry in growth? Is it in decline? Is it very competitive, not so competitive? That will kind of inform us as to, what the future profit might be. And then the value in today's dollars is really about making an allowance for risk. So we can all sit down and do a business plan and a business cash flow and so forth, but we all know it's inherently difficult to forecast these things, and things can go wrong and things can go right too, so that it can move in both directions. So if you've got a business that's been around for 20 years, that's been very stable in terms of its profit, well, arguably you probably can predict that profit for that business with a greater level of certainty than, for example, a startup business. For a startup business, it's kind of pie in the sky. Who knows what it's going to do? So there's a high level of risk. So the way then you deal with that is you work out what cash flows the business you think is going to generate, and then you apply what's called a discount rate. And a discount rate is an interest rate that reflects the risk associated with those cash flows, and then it's just a calculation of, it'll produce then the calculation of what that business is worth. So really, my view, Mena, is that a business is really equal to the profit that it's going to derive. What do you think?
Yeah, definitely. And you also got to ask yourself, what are you really buying? What's the underlying asset? So are you buying goodwill, for example? Are you buying intellectual property? Are you buying a brand? What is it, and how can you really put a value on that? So, if you're a one-man band, for example, such as, I don't know, if you're an IT business, for example, and you're just providing consulting services, well, there's no really goodwill because everything lies with the principal who's running that business. They don't really have any staff. They have got one client, for example. There's no real value there. So you really got to ask yourself, what is the underlying asset that you're purchasing?
Yeah, it's like a cash machine, I think. It's a machine that's going to spit out some cash each year. You're buying the actual machine that delivers that cash. But if you've actually got to do all the work to generate that income, then, like you say, there is no business. So it's really, I think it's important. A lot of people contemplate buying a business, but they don't really understand whether they're buying the goodwill, whether there's a special process, a product, a brand, a system, a workforce. All these things can add value to a business, but it's really important to understand what you're really buying. In terms of valuing, often there are rules of thumb. There can be industry-specific rules of thumb or just general sort of business rules of thumb in order to value businesses. So people will say, look, you'll pay 4 times profit or 1 time sales, or, it could be for startup businesses that are in technology, it could be monthly users or visitors. There's just ways to sort of measure the value. Now, rules of thumb can be useful in terms of estimating, but I wouldn't rely on them. They're a check measure, I guess, to a sanity check to sort of work out what could this business be worth. And rules of thumb are really typically implied by past transactions. So people will work out, that business sold for $10 million and its turnover was $10 million, so 1 time sales is the right kind of rule of thumb. So, which is fine, that's a good way to sort of check measure, but at the end of the day, it's really about profit and cash flow. What other ways can we value businesses, Mena?
Evidence. Evidence is probably a key component in valuing a business. So generally, you touched on it just before, Stuart. You'd look for other comparable businesses who which have sold,
Yep.
so that you can benchmark what you're purchasing against those other businesses. Now, it could be a particular industry that you, like say a retail industry. Typically, retail industries go for a multiple of EBITDA, and you can basically work out what the profit is of the business that you're purchasing, and use that sort of as a benchmark.
Yeah, the difficulty is with small to medium sized businesses. Those sorts of sales numbers aren't published. Whereas for much larger businesses, say listed business makes an acquisition or something, there's more publicly available information to benchmark that. The way to deal with that is really to use an accountant or business valuer that has an industry specialisation. So any accountant that operates in a certain industry, whether, let's say pharmacies, for example, if they've got a lot of pharmacy clients, they will know from their own experience how those pharmacies transact and what multiples are being paid. So really, that's the best thing you can do if you want to value a business in a particular industry, is find the accountant or business valuer that sort of dominates that industry or specialises, and seek advice from them. So there you go. That's how to value a business in less than 6 minutes, but at least it gives you, a bit of an idea of what are the components of business value and how to go about doing it. Thank you for listening to the Holistic Accountant podcast. To find out more, please visit holisticaccountant.com.au.